Hello, friends, and welcome to my YouTube channel Simply Stocks. And today it is Sunday, and this is the question answer session. So, I have a lot of questions that have come in. So, let's start with the question answer session. Let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position into any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I start with the question answer session, here's a small request that kindly support me on Patreon. And once you do that, it will help me grow the channel. It will also help you ask questions, a lot of questions on Patreon. There are different tiers, so even you can start with a $2 contribution per month, and you can ask me any questions with regards to the markets or your portfolio, etc. And just go ahead, and I have written very a lot of exclusive articles on Patreon on stocks as well as the markets that I do it from time to time on a weekly basis. Before I answer your queries, here's a small snapshot of where the market is and what lies ahead. In my opinion, there have been extreme moves on both sides. So the market fell a lot in the initial period, and we have seen levels of 7700, hit. But then later on, we have seen a surge as well. So this week we saw a surge from 7550, 7600 levels all the way to 9000, and the market receded from those levels as well. Uh, I believe that over the course of the next few weeks, we could see levels of less than 7,000, because of the kind of activities taking place in India because of the shutdown, etc. And it is now feared that the shutdown could extend further than 14th of April, with the kind of cases coming together. So all these things are not auguring well for the market, and 8600 seems a steepy level, considering the kind of you can say stalled economy that we are into. There is still a capitulation which is still to take place. So in 2016 we saw massive sell-off and fear in the market between 26th to 28th of February, so on and so forth, and then the market eventually bottomed out on the budget day. So in my opinion, that scenario is still to play out. People are still positive. Many individuals are very positive about the market, and once that 7500, 7550 levels are broken and we go lower, probably go lower than 6820, which was the low of 2016, then we will see a total capitulation in the market. Then we'll see fear in the market, because people will think that all levels are broken, now we are headed to 5000, and so on and so forth, and the market will turn from there. That is how the market bites you, that is how operators bite you, and probably that is what we are headed to. I do not see that we are headed to 9200 so easily. So 9200 would be difficult to come, and I feel 7000 would be more easier to come. So there is more downside that is left in the market. Volatility may reduce depending on news, but with the kind of news that are coming in this weekend, with cases as well as migrant labor going back to their hometown in bulks, I mean in thousands and lakhs, this looks like that there will be high volatility in the first couple of days of next week. So do not fear this fall, even if it goes down even further. If you have the money, then buy top businesses. If you don't have the money and you have got into top businesses, then just stick with them, and probably in the next 6 months we'll be out of this. I don't think we'll be out of this in a hurry in the next couple of months, but over the next 6 months things would be very nice, and things would be very good for investments. I mean, if you would have been positioned in those 6 months in good stocks, then you're going to make a lot of money 2.5 years down the line. So this storm will also pass by, and at 7000 we will be trading at 14 times FY22 earnings. So take that into consideration as well. So it normally, these bear markets, which are deep bear markets like 2008, the troughs out at around 12 to 14 times earnings. So minimum we are headed to 7,000. We could go down even to 6,500, 6,000 levels, but I don't know about it. No one knows, but at least it looks like that we are headed to 7,000 levels. Coming to the question answer part, Manish has asked that I should make a video on the carbon black companies. So there's Philips Carbon, there's Graphite, there is other companies, HEG, etc. I have made videos on Philips Carbon and HEG, Manish. So go ahead and watch that. I think their moves are already done. Although there could be some benefit coming in because of the shutdown in China, and there could be higher demand from India, but then you have to understand that usage of those products are more or less in the tire business or in automotives and in engineering space. And we have seen that across the globe there is a complete shutdown of industries. So where would that demand be? So I don't think the prices would shoot up, and there would not be such a demand as they were or the demand was in late 2016 till 2017. And so it is a double-edged sword. Yes, India would benefit from that shutdown in China, and India will do well, but then whether there is demand or not, we don't know. So it's a confusing thing altogether. You have to look at the news flow, etc., before taking a call on these stocks. SK Nurul has asked my view on Pidilite, Deepak Nitrite, and SRF. I feel all three of them are good. And about the chemical industry, I said that the normal chemical companies are going to be beneficiaries. So Pidilite fall into that, Deepak Nitrite, Gujarat Fluorochemicals, and all these companies, which Gujarat based companies, they would do well. So you have to take that into consideration, but there are some specific companies that might not do well because of the higher raw material prices, and because of the fact that they source raw material from China. Most of their raw material come from China. But do your own analysis. It is a very confusing space, I must say that. And that's why I look at pure businesses, or businesses which are more or less into consumption, pure consumption, and I look at whether the demand will pick up of those businesses, and when would that happen, whether the prices are right to get into the stock. Jagdish has asked, what about future retail? I have the same opinion as I have with future consumers, so nothing changes. The promoter of the group, Kishore Bayani, has pledged a lot of shares, and now pledged shares are being sold into the market, and that is why we are seeing a heavy selling in the market with respect to the future group stocks. And the same will continue with, say, a future retail, future market networks, as that has been happening with future consumer. And I'm amazed to see a stock that was trading at 78 odd rupees in December 2017. In just about 2 years or so, just over 2 years, the stock is now at 8 rupees. It has absolutely destroyed wealth of people and individuals, and I'm disappointed with the kind of work that the top management has done. Um, Thirumalash has asked that what is my opinion about Glenmark. I think Glenmark would do well, but I'm not very positive about the pharma companies. I'm not very positive about the pharmaceutical industry as others are. They would do well. I mean, pharmaceutical will give you 17-18% year on year return, but there are many other companies which have coming which are coming at a discount that we can look at. But Glenmark on an individual basis should do well. So after the question on Glenmark, the next question comes in on India Mart, and I believe, Kirandeep, that India Mart Intimesh is a good stock to invest in, but I have a problem with the kind of revenue growth and the profit growth it has shown, which has been in a W-shaped manner. So it has been good for a couple of quarters, then there is a dip, then there is a very good growth, and so there's no consistent growth. And I'm But I want to make sure when I select a company that the growth should be consistent. So one can look at something like InfoEdge, which has fallen a lot and might still fall because of the kind of trouble that they are into with respect to operations, etc. Uh, Working from home and total shutdown would not help their Naukri business, and they have other businesses as well, Zomato, etc., which are not doing that well now and probably not do well for the next month and a half. It could still come 20-25% cheaper than these levels, which would be very attractive to buy into. So there are other companies comparatively that you can buy into rather than India Mart. If India Mart was the only online company to be buying into, I would have certainly bought it. But there is InfoEdge, there is IRCTC, there are other companies, and I believe IRCTC is more or less an online ticketing space, which is the largest online ticketing company. And I've talked about it many times since it has been below 1,000 rupees, that I would be going for that rather than any other company. Okay, so there's a question that has come in from Subha Roy. I have bought HDFC Bank at 1236. He has bought TCS, Reliance. Should I average equally or should I put more money in a particular company or should look for a new company to buy? I think you can average these. These you have bought at a slightly higher level. These are the times to average and keep on doing SIP. If you have more money apart from averaging, you can get into something like an IRCTC, as I have been saying, get into something like a Bata. So these are good companies to get into, but the companies that you're holding, you can definitely average them as well. Vamsi has asked my view on Kaya. Now, Kaya must be trading at around 140, rupees or even lower. I have not looked at the price for a long time. I did used to hold Kaya a long time back, 6, 7 years back when it was Marico Kaya. I lost some money into it, and then I looked at their financials, and they are getting really hit by the numbers from the Gulf countries, and they have businesses there. And because of the oil drop, if the oil doesn't recover, they're going to suffer a lot there. Plus the shutdown in India, and the fact that they are into a space or a business which is more of a recreation kind of a business in which people would look to go for parlors, and probably women would go for grooming and get the money for that. Probably this would be least on the minds of people here in India, compared to buying FMCG products and consumer discretionary, and after that this falls. So that is why there is extreme selling. And add to that that the company has not done that well with respect to the numbers when the things were going really great. So they have not been able to produce the numbers either on the sales front or on the, especially on the bottom line front, on the profit front. And we have seen continuous losses from Kaya, and no one would like to get into a loss making company, even though the business from outside would look very attractive. So we have looked at what happened with the future consumer, with the kind of products that they were out and advertising, etc. Yet the company did not produce any profits on the bottom line, no matter what happened. And a similar fate is here with Kaya. Although Kaya is completely debt free, yet it is unable to produce profits on the bottom line. So that's my opinion here. So this was my video on the question answer session. I have answered a lot of questions during the live session, and that's why I've taken in other questions apart from the questions that have already gone through the live session. If you have any other queries, kindly put it in the comment box. I'll take up next week. Uh, uh, Please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.